Guys, welcome back. After a few days, we are going back. We are shifting gears back to where which we spoke the most about, which is stock investing, and we're going to talk about several different types of stocks, or rather, I would say things to consider when you're going for stock investments or types of investment too. There are so many because there's a lot of people are skeptical about investing in stocks, and what to do, what not to do kind of deal. Always people have those doubts in their minds, but we're going to clear, hopefully this episode, hopefully this video is going to clear most of your doubts. If not, please let us know at the after the end of the video, so we can definitely discuss whatever the issues that you have on that. Venkat, the floor is open for you, and I'm going to chime in whenever it's needed.
Yeah, thanks, Randy. Yeah, this so like we talk about a lot of different stocks, guys. Before, not too much into stock because we are more into real estate, cryptocurrencies. The that stock is another investment, channel that you could become rich, right? But when it comes to a lot of people don't have, where do I go? They don't know really. That's what we're gonna cover. Like there are different types of stock, just we're going to touch the basics of it, right? We're not going to go, this is mostly for dummies or people who are beginners. Let me share my screen because I have listed out those. It's easy to follow with that screen here. So I categorize into seven different categories, guys, here. So the first one is the blue chips stocks. This is really a good one. This is a long company, like company that has been there for a
Yeah.
long time, right? It's a large cap stocks. So some of the companies there from 1800, right? It's 200-year-old company, 100-year-old company. Those are all coming under blue chips. You can buy them. It has a solid history. It has a large. So if you categorize major category of stocks is like large cap, mid cap, and low cap.
Right.
So those are the major categories. But if you categorize by the criteria, then this is how you categorize seven different ways. So this is the all the blue chips. Most of the blue chips falls under large cap because they're big companies,
Yeah.
and you should, like, if you are a long term investor, you should focus on these kind of blue chip stocks.
That's what I was going to ask you. Like, if you're, because they have proven in the past that
Right.
they're able to survive. It's for long term benefits, and I'm pretty sure you're going to cover this one later on. Because I see the penny stock, so maybe that
Exactly.
you can use for short term investment purposes, right? But I'll let you speak on that later on.
Yeah, definitely. So the next one, I'll just go with the list here.
Yeah.
Dividend stock or income stock. So we talked about this. I think in one or two episodes before. Some of the companies actually, like, when they get the income, right? They share that part of the profit to the shareholders, right? As a dividend. Like sometimes the Exxon Mobil, I think it's around 9-10%, guys.
And
So
now
we
I think it's between 6 and 7. And there are some predictions. If you just to add Venkat real quick,
Mhm.
if you are investing in M1 Finance, the pies on M1 Finance pies, right?
Mhm.
You can kind of mix and match your percentages in the pie. Like you can have a separate pie for blue chips, a separate pie for
Mhm.
companies who give you more dividends, and of course they have certain areas that you can go through news items, right? So on that I found out that there might be some decrease in investment, sorry, dividends from Exxon and so on and so forth. But it's about getting updated on what you're investing in. But like you said, ExxonMobil is one of the highest. I mean, no one
Right.
pays as high as 9%. So probably a very good investment type in terms of getting dividends. And sometimes they pay monthly. I think Exxon is paying in every quarter.
Every quarter, most of them pays every quarter, but this is like, let's say you have $1 million invested on these companies, it would be paying you the amount that you make every year normally, six
Yeah.
figure, right?
And I actually calculated in like, even if you have like 10,000, right?
Mm.
9% is $900, right? Nine
Yeah.
hundred per year. That's like probably cover more than half of the air ticket from US to India, Australia, that side of the world.
Right.
So there you go. Put 10,000 in there, but you got to keep up with the news, the updates too, because it might go up and down.
Right, right. And the people do the something called DRIP, dividend reinvestment plan, DRIP. So what did happen? Like you are getting $900 in the first year, right? It goes back to that, and then second year you're gonna have more dividend, right? It's keep on going up,
Yep.
and that's kind of like a income stocks. It's basically it always gives you, like, it almost replaces your income. Like if you are having a day job, right? It's a consistently giving you dividend. There are some companies like Aristocrat, they call it dividend aristocrats. Like it gives like several years consistently giving the dividends. So that a lot of companies, we are not going to go through that companies in this video, guys, because we just going through the different types of stocks here. The next one is defensive stocks. It's like a very less sensitive to the market. Like sometimes the market trend, like if somebody Elon Musk says something bad about game, I don't know, GameStop, right? It goes up. Elon Musk brings something about something, any companies, the thing goes up right away. Like
Yeah.
Etsy. He just talked about Etsy. He likes Etsy. That's it. His Twitter is that's it, right? His tweet is that's it, and then it goes up right away, like next minute. So it's not going to be. It's always it's less sensitive to the market. Some of the stocks, it's very stable. That's a defensive stock. Next one is a growth stock. Like growth stocks like Tesla, for example, right? It's a fast growing industry, electronic vehicle, EV, electric vehicle. Like it's
Right.
going to be the future, right? And let's say after 10 years, 20 years, 30 years, it will be everywhere.
Yeah.
So something like that would be under, growth stock, because it's going to be growing.
Right.
Like you put money right now, the price may be low, but in the future it'll be very
Yeah.
high.
And
Uh,
probably those kind of stocks are kind of in line with the blue chips company stocks too. Is that right?
the
Because
blue
they're
chips sometimes is already high, like Amazon is like it's $3,000 something, right?
right.
Google, or some of the yeah, but yeah, it could be like there will be overlap here, like blue chips growth stocks.
Mhm.
It could be
Yeah,
like
that's right.
blue chips growth dividend stock.
Yeah.
you know
Yeah.
you could have
Exactly.
a all this combination of things.
And the good thing, if you're on M1 Finance, is you don't have to buy, if a particular stock is 300 or $400 in M1 Finance, you can buy just fraction of that share, and after 20 years, it might be whatever you want in 20 years, right? To retire with.
Yeah, that's a great point. Yeah, that's true. Right, right. Fractional share is Robin would also offer that,
Yeah.
and Webull doesn't offer it, unfortunately. But yeah, M1 Finance is a uh, good robo advisor for that. The next one is a cyclical or cyclical, right? Seasonal. So it's like cruise stock, right? Let's say wintertime is not going to be really high, something like that. So in the summertime, when the cruise is prices are really high, the stock
Mhm.
price goes up.
Yeah.
So it's more cyclical. It has a seasonal effect into it. That's cyclical. And then the next one is
And quick one, Venkat. I know we are running
Mhm.
out of time, and I really want to ask you this question. So a company like not Universal. What's that big Carnival? Sorry,
Oh,
Carnival.
Carnival, right, right, yeah.
And these days, I think, is it a good idea to buy Carnival stock, because right now with the pandemic, they might be very very they
Yeah,
might
yeah, they are not going to shut down everything, right? So
shut
think
down.
about the price
Right.
is really
Once the
low.
pandemic is over,
Hmm.
people might be like, there might be a whole lot of people who are
Yeah,
really wanting to
that
go,
time it's going to go
right? Yeah,
skyrocket.
those stocks are going to go up. So
Right.
probably keep a close eye on Carnival stocks, and
Yeah, exactly. Yeah, just always try to put a little bit, a little
yeah,
bit at a time. Like don't try to put everything at the
everything.
same time,
Yeah,
right? Dollar cost average it.
yeah.
And the last one, the next one is penny stock. Penny, or I call it speculative stock too, because not all speculative stocks are penny stock. Because sometimes like Shopify, right? Shopify is like, it's a online drop shipping website, and it's like more than $1,000, I think now, right? But it's the value is not equal to the share price. The value is so high, just like Tesla. But Tesla got a lot of good technology. Shopify doesn't have anything, not much, but it does have good stuff. But it's like a speculative stock, and penny stock is something, any stocks like less than $5. Some of the companies, they have offer like 0.001 cent to attract a lot of buyers. That way they can get more money to for their for their investments, right? They're going to do buy something, they have money to buy it
Yeah.
with that money. So that's penny stock, but be careful with this. High risk. This is high risk. It's kind of opposite to the blue chips, right? Like we were talking before. And the last one is a value stock. This is one of the things that you probably need to, if you're not doing any of these, right? I would actually, I prefer this dividend stock and the value stock, kind of those two. Value stock is like right now it's a low price, but the company got like a very good value, like an Nvidia, right? Nvidia is a graphics use, it creates a graphic card. So think about a lot of computing power, right? In the future, the lot of videos coming up. It's already so up. Like I think it's $500, close to $500. It was like only $100 2 years ago, and the technology goes up. It's going to be like $5,000 sometime soon. That's like right now. It's even 400, $500. It's still low price. It's going to go up eventually. That's, I would consider that as a value stock.
Okay. And would you like to give viewers, including myself, an example of a company, if you have anything in mind, anything in your head?
Yeah, that's what I said. Like Nvidia, it's called Nvidia. Let me
Okay.
try to edit this, right. It's called Nvidia.
Yeah. NVI.
So
Okay.
if you are
Oh,
using a computer or even the cell phone, right, all the graphics card is from, most of the graphics card coming from this company. uh and This is one of the, like, you like, normally right now it's a low price, but it has a very high intrinsic value. Like the company itself is really going to flourish, that it's going to flourish like in next 2 3 years, because it has a good base. It's like mostly like a technology companies, stuff like that. That's going to be value stocks.
good. Very good. Okay, so I heard NVIDIA in a different way. So thank you so much, Venkat. So I didn't realize you were referring to NVIDIA. Yeah. So thank you. Great session. I know we kind of went over, but I really hope I learned something every time we talk. I learned something just like you guys, and great explanations on these different types of investment, stock investing. If you, like I said, if you have confused with anything, or if you have any further questions to ask, please feel free to ask those questions. And if you like the video, just share the good word, and get your friends to ask questions too, or view our videos, so you can learn something, and that way we can also learn at the same time. It's a two-way street. Thank you so much for staying with us. It's goodbye from us.
Thank you, guys.